Okay, so real quick, this is something, the last element. This is very important. A lot of people don't talk about this. I mentioned it before, but I'm going to reiterate it. So just say we want to get the January 23rd call option. So now just say you had around $100 to work with. You see volume 2,877, open interest 5,208. That's important. Let's see. And that's the 102. Let's go to the 85-cent contract. Volume 3,391, open interest 6,569. Let's look at the 71 cents. Volume 984. Let's see, 59. 3,400. Let's see, 50 cents. See the volume kind of smaller, 711. Open interest 629. Let's see. Look at that volume on this 35 cent, 234, and then open interest 723. So the reason this is important because it determines how liquid this, because you have volume for like just the market overall, but when you're looking at the option contract and you look at the volume and the open interest, is dealing with this particular contract. So each contract has different volume and open interest. So what it's saying is open interest is how many trades that is still open. They haven't exited it yet. They haven't sold it yet. They haven't expired yet. Then the volume is each day how much volume is going on within this contract, and it resets every day. The open interest, it can carry on to the next day. If people haven't exited their positions, to carry over. But each day for this contract, how much volume, and so this determines like the liquidity. If there's a lot of volume, then that means the bid ask spread is going to be tighter. It's not going to be as wide. You're going to be able to get in and out of your entries easily. And so the higher the volume and the open interest you want, you want to have that. And then let's go to the kind of the definition. Option value is the daily count of contracts traded, showing short-term activity and liquidity, while open interest is the total number of contracts still active, not closed expired, reflecting overall market commitment and trend strength. With high numbers in both signaling greater liquidity and easier trading. Volume resets every day, resets daily, whereas open interest carry over, indicating new money entering or leaving. So if the open interest is like high, that means new money is entering. If the open interest is low, that means money is leaving. So this also helps confirm trends or spot reversals. So if you see like the open interest is low, then maybe just say if you're in a call, maybe it's about to reverse. Let's see, option volume. So far as these option contract, the volume define the total number of contracts bought and sold in a single day. So you saw some of them had like 3,000, some had like 300, and so you'll know you don't want to get the one with 300 because it's not like a lot. It's not a lot going on. You might not be able to if you are even able to get in the trade, it might be hard to get out. And so when you set them limit orders, it'll have a harder chance for those to actually execute. Probably even market orders too. They might take a while for that. What it shows: total exposure or money in the market. for that option. So this is not for the overall market, just for these options. Each option have its own open interest and own volume, reflecting a market conviction and trend strength. Key behavior: accumulates over time, increases when new positions are created, and decreases when positions are closed. How they matter, how they work together. Volume up and open interest up. That's a great strong market. That means new money is entering the market and confirming a strong trend. So if the volume is up, but the open interest is down, that means traders are actively closing. So you know when it's down, that means when open interest is down, that means traders are leaving or closing their positions. But when the volume is up, that means the traders are exiting or losing trades or closing position, suggesting a potential trend reversal or they capitalizing, selling. If the volume is down, but the open interest is up, a new trend is forming with limited participation. So, it could be a new trend, uptrend, but if it's low volume, but it's a lot of open interest, that's where you get those theta traps at. You get the prices moving. It's like just kind of grinding upward, but it's like moving slowly. So it might be ranging or it might be moving up just real slowly. Volume down and open interest down. It's little activity. Money is leaving the market as positions are closed. And that still shows a strong market. A strong trend. We'll see that in a minute. Let me see. Okay, market. So if the price is rising, the volume is up, open interest is up, the market is strong. If the price is rising, the volume is down, open interest is down, it's a weak market. If the price is declining, the volume is up, open interest is up, is a weak market. But if the price is declining, the volume is down, open interest is down, it's a strong market because it's doing what it's supposed to do. If it's down in both volume and open interest, the price should be declining. So that means it's a strong market. The trend is making sense. And then on the other hand, if price is rising, the volume is up, open interest is up, price should be rising. So that indicates a strong market. Now, why they matter? Liquidity. Yep. Know what liquidity is. High volumes and open interest means more buyers. So when they both up, that means more buyers and sellers. Tighter spread, so that bid-ask spread isn't, is not a huge gap. And better pricing. So also it's cheaper when the open interest and the volume is high. It's usually that contract usually have a cheaper price. Market sentiment. They provide insight into whether new capital is flowing in or exiting. Positions are being unwound, helping predict potential reversals or continuation. So this is very important. A lot of people don't talk about this, but when you're picking your option contract, make sure you look at this. Even if you have to get, the next contract down, just say you want to get a 96 contract, but you got to get the 85-cent contract. If it has more open volume, more open interest, then that might be the play.